So guys, stock markets are known for their volatility, right? So in fact, every day in the newspapers or in the news, we hear about stock market went up or the stock market came down. So going up and down is just part of being in the stock market. Now what happens is that when the stock market goes up, we feel very good about our portfolio, right? So we look at the portfolio, it's going up, we are making money, everybody is happy. But what happens when the stock market falls? We begin to worry that how much more it will fall and how much more money we will lose, right? So that is why it is very important to have a special category of stocks in your portfolio called defensive stocks that will protect your portfolio from falling too much. And in this session, we will discuss everything you need to know about defensive stocks. So what are defensive stocks? So defensive stocks are basically companies that are resilient in economic downturns and tend to perform better than the overall market during the economic uncertainty, right? So let's say the example of COVID-19, when every stock was falling like 30%, 40%, 50% or even more. These defensive stocks managed to lose only 10 to 15% of their value. And that is exactly why they are called defensive stocks, because they are defending your portfolio from falling too much. But what is so special about these stocks, right? Why do they not get affected by downturns? Well, think about it. If times are tough and economy is down and money is tight, would you be willing to buy expensive things such as, let's say, cars or washing machines or phone? No, right? Because when times are tough, we would rather save the money to get through the tough times, and we tend to postpone the purchases of such discretionary items. But what about the items that we need in our daily lives, right? Do we stop buying soaps and shampoos? Do we stop using electricity and water? Do we stop using Wi-Fi and cellular services? And for that matter, do we stop eating Maggi just because it is an economic recession? No, right? So defensive stocks are companies that provide products and services that people continue to use regardless of the economic conditions. Therefore, the stocks of these companies tend to hold their value better than that of other industries. And very common example of such industries are FMCG, healthcare, pharmaceuticals, utility and telecommunications. And here are some of the famous defensive stocks that are listed in the Indian stock market. Now the next question comes, should we invest in defensive stocks, and if yes, how much? Well, the answer to that question depends on your risk appetite and growth expectations, right? So if you are, let's say, an aggressive investor, you want to generate a very high return from the stock market and you don't mind your portfolio dipping, 30, 40, 50%, then you don't need to worry about defensive stocks. But if you are a conservative investor and you worry whenever the stock market falls down, your portfolio starts to dip, then defensive stocks should definitely be part of your portfolio. Now, let me tell you guys a few more things about defensive stocks. Number one thing is that not all defensive stocks are created equal, right? So some businesses, they have better business models than others. So you definitely need to do your due diligence before picking the best ones from that category. Now, the second thing which is definitely worth keeping in mind is that even though these stocks tend to be stable in the economic recession, but the return expectation should be usually lower than others, right? So if you have too many of defensive stocks in your portfolio, you are compromising on your long-term gains. And the last thing that you need to keep in mind is that seasoned investors, right, who have been in the market for a long time, they keep changing the weightage of the defensive stocks in their portfolio based on the market conditions, right? So they will increase the weightage when the markets are going down, and they will decrease the weightage when the markets are going up, right? But that is something you can do only when you have a good understanding of the stock market, right? So I hope that you guys understand what defensive stocks are and what is their importance in one's portfolio.